Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for February 19, 2020. Today we're looking at the AUDUSD, the Australian versus the US dollar, for today's trade analysis. Starting here on the daily time frame, over the past several weeks we have been in a downtrend, actually past couple of months, been in a downtrend, black trend line showing the fall, let's see, starting all the way up here into the 1.7 or 0.7030 area or so, top of the black trend line. That was back on December 31st, made its highest high, and it's been going down ever since the beginning of the year. However, capping out, bottoming out, I guess, into the significant multi-year low, 0.668575, the orange shaded area down here at the bottom of the chart. Look back to the left, you can see the last few times testing down here into the orange zone became significant reversal points for the market to go back up. If I zoom out, I'm going to zoom way out so we can see some history here. We're going all the way back in this vantage point now, looking all the way back to 2015. You can see this is the most significant low since 2015. Actually, let's go out to the weekly time frame. And the last time we were into these price levels, and it's hard to see here, but the red vertical line was the last time we were into and underneath these price levels, which is back in 2009. So significant multi-year lows that we're challenging right now for the Australian dollar. Now, the question, of course, of the week, of the day, of the month will be, is it going to break these lows and make new lows, multi-year lows, or is it going to hold it and we're going to see some rebound back higher like what happened back in mid part of last year, August and September of last year, where it hit it and became an uptrend? There's still question about that. Will it reverse or will it continue to go lower? Over the past couple of weeks, though, we can see support here. We saw the first attempt back here into that was back on January 31st. Tested it the first time and bounced back up to the pink zone. Came back here, got a little bit underneath it, even challenged underneath it. False breakout, turned back higher to the blue zone, and here we are again into the same area. So we have two potential opportunities. Either it's going to do the same thing. It's going to bounce, it's going to break above the black trend line yellow zone, and we're going to see further reversal for the Australian dollar. Or it's going to break through here and it's going to go lower. For the time being, in the trade room, I often talk about the three decisions we must make as traders. Should we sell a currency pair? Should we buy it? Or should we not trade it? Well, first, as we go to selling this currency pair in the direction of the trend, I think as long as it's above that orange zone, sitting close to and above 66.85.75, I don't think this is a good sell opportunity. Your risk is higher and your potential reward is being capped right now. Your potential profit is being capped. So I don't think you can really sell this unless it makes some rebound higher or breaks through the orange zone. So that's kind of off the table right now. On the day, though, there are possible opportunities, I think, to take advantage of bounces and potential reversal. We talked a little bit about that yesterday in the trade room. What is a potential reversal? What's an actual reversal? And I think we're poised at potential reversal, and there isn't actual reversal quite yet. Let's take it on down here to the 4-hour time frame, and there it is again. Look at it, just challenging and testing here into the orange shaded area or into the 0.6685 level. So for the time being, as long as it stays above this orange zone, I think there's opportunity. I think there's opportunity for signals of reversal from this orange shaded area, possibilities of reversal. Your risk is pretty light, risk is pretty low. Your stop loss would be underneath. That way, if the market decides to go lower, then you would limit the impact to your trading account if it breaks underneath there. Otherwise, buying here, targeting back first to the black trend line yellow shaded area may provide some intraday profit. Let's see, from the orange zone back to the yellow zone, we're looking at about 20 pips or so. But if it was able to break there, we're looking at 50 to 80 pips on the upside. You're risking about 25 to 30 pips on the downside underneath the orange zone if you take a long from the 66.85 level. Selling, let's talk about that for a moment. In the direction of the trend, the only reason to do that, it was to be back at 67.05, the yellow zone, as a short opportunity, as you see on the previous 4-hour candle, or it gets underneath the orange zone. So until it gets under the orange zone, I'm not selling this. Potential intraday buys into the orange zone, targeting the yellow zone. Another interesting factor, and something we'll look at the trade room later today, is the US dollar and how it is at significant resistance highs as well. And if it takes a dive or some sort of pullback reversal, that would improve the chances that this is going to take a turn higher. We'll look at our trend and volume indicator later in the trade room as well for any improved confidence for a reversal on the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.